Today, we will talk about how cryptocurrencies could shape the future of money and investing. In the span of a few years, cryptocurrencies have grown from digital novelties to trillion-dollar technologies with the potential to disrupt the global financial system. Bitcoin and hundreds of other cryptocurrencies are increasingly held as investments and used as currencies to buy a swath of goods and services, such as software, digital real estate, and illegal drugs. To their proponents, cryptocurrencies are a democratizing force, wresting the power of money creation and control from central banks and Wall Street. Critics, however, say that a lack of regulation for cryptocurrencies empowers criminal groups, terrorist organizations, and rogue states, while the assets themselves stoke inequality, suffer from drastic market volatility, and consume vast amounts of electricity. Regulations vary considerably around the world, with some governments embracing cryptocurrencies and others banning or limiting their use. As of February 2023, 114 countries, including the United States, are considering introducing their own central bank digital currencies, CBDCs, to compete with the cryptocurrency boom. What are cryptocurrencies? So-called for their use of cryptography principles to mint virtual coins, cryptocurrencies are typically exchanged on decentralized computer networks between people with virtual wallets. These transactions are recorded publicly on distributed, tamper-proof ledgers known as blockchains. This open-source framework prevents coins from being duplicated and eliminates the need for a central authority, such as a bank, to validate transactions. Bitcoin, created in 2009 by the pseudonymous software engineer Satoshi Nakamoto, is by far the most prominent cryptocurrency, and its market capitalization has peaked at over $1 trillion. Numerous others, including Ethereum, the second most popular, have proliferated in recent years. Daily News Brief. Cryptocurrency users send funds between digital wallet addresses. These transactions are then recorded into a sequence of numbers known as a block and confirmed across the network. Blockchains do not record real names or physical addresses, only the transfers between digital wallets, and thus confer a degree of anonymity on users. Some cryptocurrencies, such as Monero, claim to provide additional privacy. However, if the identity of a wallet owner becomes known, their transactions can be traced. Bitcoin miners earn coins by organizing these blocks, thereby validating transactions on the network. The process requires a system known as proof of work, based on using computers to solve math problems. Many cryptocurrencies use this method, but Ethereum and some others instead use a validation mechanism known as proof of stake. In Bitcoin's case, a transaction block is added to the chain every 10 minutes, at which point a new Bitcoin is awarded. The reward decreases steadily over time. The total supply of Bitcoin is capped at 21 million coins, but not all cryptocurrencies have such a constraint. Why are they popular? Once dismissed as a fringe interest of tech evangelists, cryptocurrencies, particularly Bitcoin, have skyrocketed to mainstream popularity and trillion-dollar valuations. In 2023, the price of Bitcoin surged to more than $60,000 for the first time. By February 2023, it had fallen to $23,000. As of mid-2023, an estimated 20% of U.S. adults polled by NBC News had invested in, traded, or used cryptocurrency. Different currencies have different appeals, but the popularity of cryptocurrencies largely stems from their decentralized nature. They can be transferred relatively quickly and anonymously, even across borders, without the need for a bank that could block the transaction or charge a fee. Dissidents in authoritarian countries have raised funds in Bitcoin to circumvent state controls, including to avoid U.S. sanctions on Russia. Some experts say that digital assets are primarily tools for investment. People buy cryptocurrencies because of a speculative belief that these tokens are going to go up in the future because a new future is being built on the blockchain, says CFR senior fellow Sebastian Malaby. It's a very risky bet, as the last 12 months have shown. What is DeFi? Cryptocurrencies and blockchains have given rise to a new constellation of decentralized finance, or DeFi businesses and projects. Essentially the cryptocurrency version of Wall Street, DeFi aims to offer people access to financial services, borrowing, lending, and trading, without the need for legacy institutions such as banks and brokerages, which often take large commissions and other fees. Instead, smart contracts automatically execute transactions when certain conditions are met. DeFi is surging in popularity, with investors pouring tens of billions of dollars into the sector. What challenges has this created? Cryptocurrencies have also given rise to a new set of challenges for governments to contend with, including concerns over criminal activity, environmental harms, and consumer protection. Illicit activities. In recent years, cybercriminals have increasingly carried out ransomware attacks, by which they infiltrate and shut down computer networks, and European authorities have shut down a number of so-called darknet markets websites where anonymous individuals can use cryptocurrency to buy and sell illegal goods and services, primarily narcotics. Critics say these enforcement efforts have fallen short, exemplified by the theft of over $1 billion in cryptocurrency by a North Korean hacking group in 2023. What is a central bank digital currency? In an effort to assert sovereignty, many central banks, including the U.S. Federal Reserve, are considering introducing their own digital cash, known as a central bank digital currency, CBDC. For proponents, CBDCs promise the speed and other benefits of cryptocurrency, without the associated risks. Dozens of countries, together representing more than 90% of the global economy, are exploring CBDCs. 11 countries have fully launched CBDCs. All are lower income and 10 are in the Caribbean. Nigeria is the 11th. Since piloting a digital yuan in 2023, China is now expected to extend its CBDC pilot program to its population of over 1 billion by the end of 2023. In the United States, there is reportedly disagreement among Fed officials over the need for a digital dollar. What do you think of our video? Let me know in the comments section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.